Why is modernization of the BOJ a big deal?
But for a country that has its own currency and wants to pursue an independent path in the world, your central bank is one of your most important institutions. It's critical that your central bank that serves the people of Jamaica is sound, is credible, and pursues policies that inure to the benefit of the Jamaican people.
Share with us, what does the modernization entail? And in speaking of modernization, are we saying that what exists is not modern, a little archaic?
Okay, so the core element of the modernization exercise is central bank independence. Ben Bernanke in 2010, in a very famous speech that he gave, when he was accounting for the growth and the role and the evolution of central bank independence around the world, he observed that the goals of monetary policy are best established by political authorities, but the conduct of monetary policy in pursuit of those goals ought to be carried out by an independent, or best carried out by an independent entity. And the reason for that, or what is behind that conclusion, is the lag time, or the substantial lag involved in monetary policy implementation. The time frame between when monetary policy decisions are made and when those decisions have an effect tend to be longer than the typical effect of, or the typical desired effect of political kinds of decisions. And therefore, empowering an independent central bank, or certainly persons who are in an independent central bank that exists within a framework of accountability and robust governance with transparency, are best placed to make those kinds of decisions. Inflation has been a scourge on Jamaica. We have lived through periods of very high inflation, high inflation is the enemy of the poor and the enemy of those without assets. Persons who have a lot of assets are largely insulated from inflation, and persons who are large borrowers, fixed rate borrowers, are largely benefit from high inflation. But high inflation, damages the poor and those without assets, and therefore if it is left unattended, it widens social inequity. Now, central banks, one of their roles is to fight inflation, to ensure inflation is low and stable and over time. The credibility of the central bank in that exercise is critically important, because if the central bank is credible, inflation targeting becomes a self-fulfilling exercise. And credibility is best enhanced when all citizens know that the persons who are responsible for the conduct of monetary policy have independence in doing so. But I must say that by independence, operational independence, we don't mean unconditional independence. For central bank independence to have democratic legitimacy, there must be an accountable framework, there must be a robust governance framework, and the framework must be transparent. So the modernization exercise is an exercise that focuses the mandate of the central bank on price stability within a robust governance framework that embraces the best principles of accountability, transparency, and credible, durable governance. That is what the modernization exercise is about.
In Jamaica, we have been talking about different levels of autonomy for the central bank for a few years now. In 2014, 2015, the amendments to the Banking Services Act, for example, made the central bank semi-autonomous. There have been movements towards autonomy for overall financial system since 2015. What makes the movements to independence now that much different?
Okay, so the central bank has a function for prudential supervision, and there was a time when the ultimate authority in supervisory matters would be the Minister of Finance. That was removed, and the central bank gained autonomy in supervisory matters. In terms of what is key about exercise that we have just engaged in, the modernization exercise, is that the mandate of the central bank was clarified, and the mandate is unambiguous, and it is to pursue price stability and as well as financial system stability, with price stability being the primary mandate. The mandate before was confusing, and one could not hold the institution to account because it wasn't clear, certainly as far as inflation is concerned, because that was not its explicit mandate. So what the modernization exercise entails in part is making the mandate of the central bank explicitly clear. And so all Jamaica knows, all stakeholders know that we have empowered and improved and increased the credibility of a durable institution that's responsible for pursuing monetary policy implementation that is consistent with low, stable inflation.
The Bank of Jamaica Amendment Act 2020, which entails much of the details of the modernization program, was passed in the House in, I believe, November, in the Senate in December, and received royal assent on the 22nd of December. When will it take effect?
It is going to take effect in April. The appointed day is going to be in April, and I'll announce the precise day at a later point, but it will take effect in April, and effective on that date in April, the central bank will be an independent central bank governed in accordance with the Bank of Jamaica Amendment Act 2020. And if you want me, I can, Jamaica operated under conditions of fiscal dominance for a very long time. And fiscal dominance is described as a condition that the country faces when it has chronically, unsustainably high levels of debt, and where those debts are chronically high, unsustainable levels of debt, as well as very large fiscal deficits. And what happens under conditions of fiscal dominance, in effect, is that the central bank does not have the space nor the freedom to pursue independent economic objectives such as maintaining inflation low. The central bank is commandeered to essentially keep the government from bankruptcy. And interest rates, in effect, are set at levels that allow the government to continue to attract lenders. We have been through this. We know this very well. While on the fiscal side, we have implemented reforms to ensure that Jamaica has a sustainable debt path going forward, there is a loophole that still existed, which is that the government could borrow, a government that was irresponsible could unjustifiably and unreasonably borrow from the central bank and print money in the exercise in that process, subjecting the country to high and runaway inflation. A part of the modernization exercise is to be very clear on the conditions on which the government can borrow from the central bank. And the only condition is in a national emergency, a declared national emergency. And even then, Parliament would have a role. So if in a national emergency, the government needs to borrow from the central bank, the Minister of Finance would need to have something subject to an affirmative resolution that approved that borrowing. And that's a major, major step. Again, it lends to the credibility of the institution and the credibility of its empowerment to conduct monetary policy in such a way that preserves, that attains, maintains, and preserves low and stable and predictable inflation.
I've seen some criticisms of that move away from fiscal dominance, while commending the move away from fiscal dominance in principle. Some people say you have not gone far enough. The affirmative resolution requires a simple majority in Parliament. And the thinking is that, particularly with a supermajority at the moment, for example, that's easy to come by. Anytime the government wishes to utilize the central bank for its advantage. The option is put on the table, for example. The legislation has created many committees. The Monetary Policy Committee of the Central Bank, for example. There is another piece of legislation dealing with the Independent Fiscal Commission. And some feel it would be best to repose that responsibility for agreeing to the national emergency within a more independent body. How do you respond?
Okay, that's an interesting take. You know, no country is going to be able to legislate its way to economic prosperity and fulfillment. Countries will always rely on a vigilant and active citizenry in order to achieve its objectives over time. The aim of the legislation is to breathe the air of transparency into the exercise of that particular function if it were ever to arise. So what it first does is to say that borrowing from the central bank can only take place in a national emergency. Now, the citizens of Jamaica ought to know what is a national emergency from what is not a national emergency. And even in a national emergency, the minister can't secretly borrow. The minister has to, in the openness of the parliament, declare the intention to do so and have parliamentary colleagues who ultimately represent the people of Jamaica give their assent. Now, if a government chooses to abuse that responsibility, an informed and alert citizenry would punish that government. And as I said before, we're not going to legislate our way to nirvana or to heaven or to prosperity. There'll always be a role for a vigilant, active media and citizenry.
You just spoke about the central bank being transparent, the government being transparent. Tell us more of the inbuilt mechanisms for transparency in the raft of legislation.
Okay. So for central bank independence, as I said before, to be democratically legitimate, it's critically important that the framework includes transparency mechanisms and accountability mechanisms. Some of the transparency mechanisms in the legislation, which will become reality in April, require, for example, the publication of the minutes of the Monetary Policy Committee meeting. We've had a central bank for all 59 this year, 59 years of independence. we have never seen any of the deliberations that go into the setting of interest rates or other monetary policy decisions ever. We, the citizens of this country, are subject to the decisions made by the central bank, but we've never seen them. What this modernization exercise will bring into reality is that though the minutes of the meetings, when the monetary policy experts get together to decide on setting of interest rates or other monetary policy decisions, on a lag basis, those minutes will be available to the public. That will deepen the understanding of monetary policy, of the considerations that monetary policy practitioners take into account, and will lead to more informed decision making. The Monetary Policy Committee has to produce 2 reports per year, and the governor of the central bank will be required to appear in Parliament in front of the Standing Finance Committee of Parliament, which is a committee of the whole House of Parliament, to respond to queries, to questions on the Monetary Policy Committee report, or indeed on any other matter that members may have in representing their constituencies. That is a new feature, and having the central bank being accountable to the Parliament, and of course the Parliament is accountable to the people, that is the accountability mechanism that is set up. So those are 2 of the very important elements of the transparency that is built into the modernization exercise.
Right. There have been the creation of several committees. We've mentioned the Monetary Policy Committee, but there's the Financial Policy Committee, the Financial System Stability Committee, Financial Regulatory Committee within the legislation at the BOJ. Can you share with us what are the activities, what's the importance of these various levels of committees?
The 2 main committees are the Monetary Policy Committee and the Financial Policy Committee. The central bank has 2 main functions. One is the conduct of monetary policy, and the supervisory function that maintains, prudential stability, the stability of the financial system. In terms of the conduct of monetary policy, before this modernization exercise, much of that power and authority rested with and in the person of the governor. What the modernization exercise seeks to do, consistent with international best practice, is to diffuse that responsibility into a collective which consists of a committee headed by the governor, which consists of senior executives in the central bank who are charged with monetary policy implementation responsibilities, as well as 2 external members who can bring an external perspective, but who have a background in a particular area. And the Monetary Policy Committee will preside over monetary policy decisions. One of the primary monetary policy decisions is what the policy rate ought to be. The policy rate today is 0.5%, the lowest in Jamaica's history. And that policy rate was reduced 10 times since 2018. That's the decision what to do with the policy rate that the Monetary Policy Committee would be engaged in. But it'll also be engaged in reviewing open market operations. And open market operations are operations that the central bank engages in to manage liquidity in the financial system. And the management of liquidity in the financial system is a crucial lever that the central bank has to impact economic outcomes. The Financial Policy Committee will be responsible, again, it's a committee made up of members of the Bank of Jamaica, chaired by the governor, and it also includes external members who have expertise in a particular area who are appointed, and that committee is responsible for certain decisions. The Financial Policy Committee oversees the financial policies of the central bank, which include policies that relate to prudential and supervisory matters. And so Again, what we have is a devolution of responsibility to a broad committee of well-informed and well-prepared Jamaicans to discharge that particular function.
There will also be some changes at the corporate governance level. For example, the board. Tell us about some of those changes at the board levels.
Yes, there are quite significant changes at the level of the board. What we have sought to do is to introduce, the part of the modernization exercise, as I mentioned before, is to ensure that the governance of the central bank is strong and durable and robust and is independent of the political cycle. Or let me rephrase that. It is not subject to the political cycle. So we've made the modernization exercise retains the broad structure of the board, which is it consists of members who are executives who work at the central bank, the governor, the senior deputy governor, and another deputy governor, along with 5 persons from outside the central bank who bring a range of experience and expertise. What we have done, however, which is consistent with international practices, is the appointment of those 5 members is staggered over time, meaning that they have different terms of office, and as a result, the board cannot be completely changed in a single political cycle. So one member is appointed for 2 years, another member is appointed for 4 years, another member is appointed for 6 years, another member is appointed for 8 years, and the 5th member is appointed for 10 years. And those board appointments only change on the expiry of those terms. If for some reason one of those board members needs to demit office before the expiration of their term, their replacement can only be appointed to finish that term. So as a result, every 2 years a vacancy arises on the board of the central bank, and therefore it would require the passage of time for all 5 members to be replaced. And what that allows for is the preservation of institutional knowledge across political cycles, and allows for stable governance, for knowledge to be accumulated and to be applied over time. Because remember that the central bank operates with the long term in mind. The decisions that the central bank makes, primarily the decisions on the monetary policy arena, are decisions that are intended to have an effect over the medium term. And therefore it's important that a perspective, institutional, that can be brought to bear upon the governance of the central bank is one that is durable and that is stable over the long term. And this is the first instance where we will be having this kind of governance arrangement in Jamaica, where we have a staggered board with individual terms. Each board member has an individual term. What happens today is most public sector boards, all appointees have the same term, and so they arrive together and they leave together. Under this governance construct, each board member has a different term, and those terms are staggered over time to ensure that the expirations happen every 2 years. So it takes 10 years for the entire board to expire. And that, as I said, it preserves the institutional memory and leads to stable governance over time. Another part that is new in the governance framework is that board members have to be fit and proper. Prior to this modernization bill, there was no requirement for members of the Bank of Jamaica board to be fit and proper. I mean, I believe all appointees have been fit and proper, as a matter of fact, but having that requirement in law is a very important step to enhancing the credibility of the institution.
What are some of the requirements, the fit and proper requirements built into into this? What do you look for in fit and proper?
Right. Well, the fit and proper is, I'm not, the Minister of Finance is not involved in the determination of fit and proper, but fit and proper criteria are well established. You want, and it's usually sometimes established in the absence of negatives, in that you want persons who don't have in their past instances where their credibility can be brought into question, and or where there are incidents where their judgment on matters to do with fidelity and honesty can be brought into question. Fit and proper is a requirement in the financial system. So to serve on the board of a bank or an insurance company, or even other entities that are regulated by the FSC or by the BOJ, or indeed by the VGLC, have to fulfill fit and proper criteria. So fit and proper is a well-established benchmark in Jamaica. We just had the anomaly that it's required for all the entities that the BOJ supervises, but it was never required of the BOJ itself. Well, with this modernization bill, we have fixed that anomaly, and persons appointed to serve on the board of the central bank and indeed on its committees have to be fit and proper.
I imagine there would be financial and budgetary implications of this move towards a more independent central bank. Is the government putting its money where its mouth is? What are the financial implications?
I mean, the financial implications are marginal. We have a few more committees, which means making those committees operational will cost, but that's a very marginal cost in the context of the overall budget of the central bank, and with the duties that they'll discharge and the benefits of discharging those duties.
Again, on the criticism side, there's the view that the focus on modernization, independence of the central bank, it won't create more jobs. It won't achieve the elusive goal of economic growth. So why the attention?
That could not be a more unfortunate view, and it's actually wrong on its premise and its conclusion. Having a central bank that is organized around attaining and preserving low, stable, and predictable inflation, and doing so credibly, is critically important for the deepening of financial markets, for investors and economic agents to be able to take a long-term perspective, because monetary policy will be decoupled from the political cycle. One doesn't need to look just to make decisions with the political cycle in the frame of view. One can make long-term decisions because one has the assurance and the confidence that there is an empowered institution that is designed to maintain price stability. When economic agents can take a longer perspective, what you have is the deepening of financial markets, which allows for greater financial inclusion. The kind of products that become available, a secondary mortgage market, or becomes a more distinct possibility. And if that becomes a distinct possibility, then it means that housing finance becomes revolutionized, as an example. And the products that become available will multiply greatly with the confidence that is derived from an independent central bank and authority. And the deepening of the financial markets, the expansion of financial products that are available, serve to further entrench and widen financial access and financial inclusion, which in turn are critical ingredients of economic growth. On the other side, maintenance of economic stability is a prerequisite for long-term economic growth. And what central bank independence and a modernization exercise achieves is that we're institutionalizing macroeconomic stability. We have not just attained it, but we are institutionalizing it, not simply with laws, but with credible institutions that are empowered to conduct policy, in this case monetary policy, in a manner that is consistent with long-term stability.
You're saying there are benefits for all Jamaicans?
There are immediate benefits and there are long-term benefits for all Jamaicans.
The independence of the BOJ is one aspect of the institutional building and the comprehensive overhauling of the financial system that is required. Microfinance legislation, for example, is not yet up to date. And the bringing of credit unions, for example, under the Bank of Jamaica supervision has been outstanding for some time. With the move towards a more independent central bank, when can we see those matters being addressed?
Yeah, so no, I'll just correct you on one thing. The Senate, the House and the Senate recently passed the microcredit legislation, which we have to arrange another session to talk about, because that is a huge institutional change. It will bring the microfinance sector under the regulatory purview of the central bank and will require certain market conduct practices and certain transparency requirements of institutions that participate in that industry to the benefit of consumers. There are a huge array of consumer protection measures in the microcredit bill, as well as measures designed to ensure that microcredit institutions cannot be repurposed for money laundering or other undesirable activities. With respect to bringing credit unions under the regulatory umbrella, that is underway and that legislation is being drafted, and that is going to be a very important step as well.
Can you remind us the Microcredit Act, when will that be will come into effect?
Well, the Microcredit Act is coming into effect this year, shortly. Once the Governor General sort of gives his assent, well, and I believe that might have happened already. There is going to be a transition period, however, for the microcredit institutions to get up to speed, shall we say, because the Act requires all microcredit institutions to be registered, to be licensed. They have to provide information and engage in quite a number of activities to be compliant. And therefore, the legislation has inbuilt a mechanism to allow for that convergence before the regime takes punitive effect. Meaning you have, and I believe you're going to have 12 months for all microcredit institutions become regularized and to adhere to the requirements of the Act, after which failure to do so will be met with sanction.
Right. The BOJ is being strengthened, certainly in the supervisory aspect, even as concern is increasing about possible elevated risk levels with the pandemic, with other possible external shocks. The IMF in their 2018 financial sector stability report had flagged the issue of interconnectedness of the banking system. Many big financial institutions operating in multiple jurisdictions, many of them foreign-owned, and the possibility for contagion and increased risk. How is that being built into the movement towards a more independent and a stronger central bank?
Right. So the conduct of supervisory affairs is a question that's best placed with the central bank. But I'm happy that you're actually reading the document from which you quoted from. Again, an informed citizenry and media is critically important to the achievement of the long-term goals of Jamaica. So I would defer that question to the governor of the central bank, who is responsible for supervisory matters.
One last question. It's related to the strengthening of the financial sector, but specifically in relation to insurance industry supervision from the Financial Services Commission angle. New recommendations were made based on consultations across the insurance sector for revision of the capital adequacy requirements. And the FSC had indicated that the action going forward would reside with the Ministry of Finance. Has that been considered? And
so the action on what?
On revision of the capital adequacy requirements for insurance companies.
No, I think you're talking about the minimum MCT, the minimum capital test, or
correct.
Yeah. So where we are with that, the FSC has made certain recommendations after a long process of review and consultation. At the time, this started when we were under the standby facility. They have consulted with the fund and with other technical, external and overseas experts. And the Financial Services Commission would have considered their position, and they made a recommendation to the Ministry of Finance to make certain revisions to the MCT process. That has been under review. It requires a regulatory change. It has to be tabled in Parliament, and that process is underway, meaning the drafting of the required documentation that needs to be tabled in Parliament is underway.
Right. The Independent Fiscal Commission is separate from the BOJ legislation and more overarching for the economy. Can you share with us what the idea is and where we are with that legislation?
So the Independent Fiscal Commission legislation passed the House of Parliament last week, I believe, and it is before the Senate for this Friday. On its passage, then I'll at another session we can speak more about it. I prefer to speak about it after it has been passed by the Senate. Does that make sense?
Yes,
yeah.
It does. Yeah.
Let me just say one other thing on central bank independence. Just to put, sometimes we report on Jamaica as if it is, without a context, or as if Jamaica sort of exists on its own, and is not a part of a broader scheme or a broader world. Central bank independence is, sort of well established as a very important, critical mechanism for the credible preservation of price stability, the deepening of financial markets, and ultimately for sustained economic prosperity. When monetary policy implementation is not independent of political authorities, an economy is at greater risk of being susceptible to very short boom and bust cycles. And that is because there's an inherent conflict between the sometimes short-term imperatives that are a part of political considerations and what is healthy longer term for the economy. As a result of this, what we have seen over the past century has been an unmistakable move toward central bank independence around the world. In the United States, the Federal Reserve was the first. When it was established in 1913, it was established, it was independent in its foundation. But its independence evolved over time. And with the period of very high inflation that the world encountered, and in particular the United States encountered in the 1970s and in the beginning of the 1980s, brought into existence even greater reforms, with respect to the Federal Reserve in the United States. And the results over the past 30 or 40 years have lended to the credibility of these kinds of reforms. A couple decades later, in 1997, the United Kingdom, in a very famous move in May of 1997, the very first thing that the Tony Blair government did was to make the Bank of England independent. And it ushered in a period of long prosperity in the United Kingdom. Around the same time, in 1998, when the European Central Bank was being established, it was established as an independent institution. And so important was independence to the European Central Bank that the policymakers behind the European project enshrined its independence in the Maastricht Treaty. Okay, not just even a separate piece of legislation, but in the treaty itself. And so in 1998, we saw an independent European Central Bank. The Japanese Central Bank as well in the late 1990s. And the move from these countries towards independence, again, gave the policy thrust for central bank independence even greater momentum. And since that time, many, many other countries, including many developing countries, have moved towards modernization of their principal monetary institution, which is the central bank, with monetary independence. So just recapping where I sort of started, when I made that reference, that quote from Ben Bernanke from 2010, what he actually said, and again, he was talking about the evolution of independence of central banking around the world. What he said was that, a global consensus has emerged among policymakers, among academics, and among informed observers that that monetary policy goals are best set by political authorities, but the conduct of monetary policy in the pursuit of those goals are best conducted by independent monetary policy practitioners. And it's a consensus has emerged not from theory, but from the observed benefits from independence. And indeed, bringing it right home to our experience in Jamaica, having lived through the hyperinflation of the 1990s and the very high inflation of the 2000s, it's only in very recent times, over the past 4 or maybe 5 years, that Jamaica has had inflation rates in the low single digits of 3, 4, 5%. And what modernization of the central bank does is to institutionalize that and to empower the central bank by its mandate and by its authority and by its independence in an accountable, transparent, and robust governance framework to pursue price stability, low, stable, and predictable inflation, not only now, but into the future. As that becomes, with the credibility of this framework, what happens is that we, as citizens and economic agents, begin to plan longer term, begin to make decisions that are longer term, and therefore deepen our economy and give ourselves a much better chance for growth and prosperity, and for our economic cycle to be longer and longer.
I wonder if you could clarify or expand on something you just mentioned. And it has to do with the preservation of government setting the policy goals. Full-fledged inflation targeting is understandable across the board, but there are critical caveats to the modernization legislation. For example, in the Bank of Jamaica Act, it says the bank shall carry out its functions with a view to achieving the principal objectives set out under subsection 1, and shall do so in a manner that recognizes the growth and employment, the growth and employment objectives of the government. The Independent Fiscal Commission legislation has a similar caveat. It will not assess the policies underlying the fiscal policy paper, which are social policy choices of the government. When you're under an IMF monitoring, there is scope for policy recommendations by the fund, for example. But in the new mechanism, there is no such mechanism for policy recommendation. That's supremely the government's purview. Just explain that a little bit.
Well, in setting up an independent fiscal commission, we're not seeking to create an IMF. I mean, the IMF is a very important multilateral institution that has a specific purpose. And what it does is it tries to maintain a global environment where governments can credibly, or countries can credibly transact between and among themselves without any fear of not being paid. Right? And so the fund comes in, they provide resources, and in return for those resources, they require structural reforms. And I think what you're alluding to, they can recommend those structural reforms that one ought to take. As a part of that process, they going to want to ensure that the fiscal position of the government and the debt position of the government is sustainable over time. Now, it is that latter element that we are going to set up the Independent Fiscal Commission to achieve, which is to ensure that the government's finances are sustainable and that our debt is on a sustainable trajectory. And in the performance of that exercise, what we're saying is that what is necessary is to ensure that the envelope of expenditure is consistent with a sustainable debt trajectory. And when the fund performs that element of its function, not its structural reform element, but element of its function in ensuring debt sustainability, that is what it does as well. It is only concerned with the envelope of expenditure. The expenditure choices within that envelope are the purview of the government. Right? But so the Independent Fiscal Commission would differ from the IMF in substantial degree in that it is not a structural adjustment institution or an institution that is charged with a responsibility to make sure that countries that a country that engages with it can have a program and leave that program having altered its prospects. That's not the purpose of the commission. The purpose of the commission is to ensure that the fiscal accounts of the government are on a stable and sustainable track, and to do so transparently, to keep the public informed, and to offer a second opinion. I mean, in these things, they're often, and we have to have a talk for this in particular, but in these things, it's often, there might be many things that are wrong, but there can be many things that are right as well, in the sense that a difference of opinion is not a signal of a problem necessarily. But if the deviation is beyond a particular threshold, then yes, clearly there could be a problem that's being signaled. But having a credible second opinion is very healthy and an important part of ensuring that we maintain a sustainable and stable path. As I mentioned earlier, an informed citizenry is a critical part of the exercise towards prosperity, and and having an environment where we have an informed citizenry is a key goal of the Independent Fiscal Commission.
And wouldn't inclusiveness, and buy-in by the citizenry civil society, private sector be enhanced by a mechanism where alternative policy recommendations could feed into
Well, we have a
government
whole
consideration?
democratic construct just for that purpose, right? We operate a democratic system where lobby groups, individuals, NGOs, corporations, universities, newspapers, media, all compete with each other to have its priorities reflected on the government's agenda. And that is a part of the democratic process which is well established in Jamaica. We don't need an institution to achieve that. We have that already.
Minister, thank you.
My pleasure.